You are listening to chartingwealth.com's daily review for Wednesday, the 17th of October, 2018. We see stocks and bonds up for the day, gold down. Let's jump first, as we always do, into the S&P 500. We can see that the weekly candle that's forming, even with a big up day for the S&P 500, 2.14%, that weekly chart is still down quite strongly, even though it's only the second day of the week. Price percent oscillators weakened off a little bit. Derivative oscillators still gaining lots of downward momentum for the week. We go from the weekly to the 2-day. What do we see there? Well, again, we seem to be forming a green spinning top at this point. It means indecision, not as much as a doji, but indecision tending up. Price percent oscillators still gaining downward momentum, and the derivative oscillators doing the same. Price percent oscillators stayed off some of the stronger down movement, but again, we're just on the first day of the latest 2-day candle. So we'll continue to keep an eye on things there, trying to push through that previous 2-day trend line. We'll see how things shape up when it finishes drawing the new candle on the 2-day chart on Wednesday. And then we go from the 2-day to the 4-hour. What do we see? Well, again, keep watching this. We see it looks like it ended the day just crossing over, up in the morning, up more in the afternoon, still below the 2-day trend line as far as the 4-hour chart goes, but it has gone green as far as the derivative oscillator, price percent oscillators trying to cross over going up, which would, of course, pull you out of that prior immediate down move. So hang tight there, pay attention. We didn't have a strong jumping in point at this point anyway, as we were talking about over the course of the prior day, is let it roll back, and then once it rolls back over going down, if indeed it does, that is your strong jumping in point. So we'll just continue to keep our powder dry on that weekly vertical crossover going down. Now let's go from the S&P 500 to the QQQ. That's the NASDAQ 100. What do we see going on there? Well, again, we see 2 days into the 5-day, the 1-week candle, we see a red down candle, derivative oscillator gaining downward momentum, price percent oscillator heading down strongly. We look at that 2-day chart. What do we see? Well, we see a green spinning top again, open box top, not as strong as a solid green candle, and price movements below that 2-day trend line still. We see that we've had a flattening of the price percent oscillator. Derivative oscillators also lost some of that downward momentum just the first day of the latest 2-day candle. We'll look at that 4-hour chart. What do we see? Well, it crossed over in the afternoon going up. And of course, as we talked about with this bottoming, to be prepared to pull out of that move after we had that successful entry back on the afternoon of the 4th. Again, what we'll what we will watch for is for this pullback to end and possibly rotate back over going down, but we know how beautiful the entry point was somewhere, and again, a little caution there because these Heiken Ashi candlesticks that we use to check average pace are not as accurate as the real candlesticks, just the standard ones. I hate to call that real, but standard. Jumping in point somewhere around 185, and of course the low down around 167.81. So again, lots of nice clean movement, but don't want to lose all that on a pullback. So, again, as we talked about, that green candle could have pulled you out, that sideways slide, or that morning up candle after that with the crossing over, of course, jumping out. But again, keep your eye on things. We haven't had a total pullout signal yet at all, and the down movement is still strong. And remember, all things being equal, markets tend to move in the direction of the largest chart. So again, continue to experiment. Keep your trade worksheet on these virtual trades. Remember, we are not a stock calling service. We're an education firm. We want you to practice on these things and get good. And of course, this is the time of year to get good at practicing. Why? Because it's the fall-winter trading zone. Isn't it so much different than what we saw over the summertime, where it was so much harder to find things moving? And of course, It is beautiful this time of year to watch things. Now, let's go on to bonds. What do we see there? Bonds up for the day, 0.22%, just barely. We see the derivative oscillator is about the same as it was on the prior week's candle. The price percent oscillator is still heading down. We have a green candle again. Market trying to move up, it appears, the first 2 days of this week. What do we see at the latest 2-day candle? We see things sliding sideways, a red spinning top at this point. And again, derivative oscillator losing momentum. Price percent oscillator heading up, hasn't crossed over going up, but that does signal some caution since it has blown through the 2-day trend line. And we go to that 4-hour chart. What do we see? Well, of course, we pulled the plug on our down move after that 4-hour chart crossed over in the morning on Thursday. At least that was the point to pull it. And we'll just continue to watch. And again, if it crosses over going down while the 2-day and the weekly are still in the negative, we'll jump back in and ride that movement down on an inverse play. So we go back to the weekly chart. And lastly, we go to gold, which was down for the day 0.10%, but we still have a big solid green up candle for the week. Derivative oscillator gaining momentum, price percent oscillator heading up. We go to the 2-day chart. Again, strong up movement as far as the Heikin-Ashi candlestick goes, and our indicators, price percent oscillator, derivative oscillator gaining lots of momentum, the derivative oscillator. And we go from the 2-day to the 4-hour. What do we see there? Well, we can see where things are sort of, again, appear to be stalling out somewhere around the 116.35 mark. Price percent oscillator has gone flat, derivative oscillator losing energy. So again, if you have been riding that up, be careful, keep your eye on things. It has gone up quite nicely. But again, want to be careful that you don't lose that momentum and have it really cake out on you and get stalled on that 200 moving average line. Sometimes it will act as it looks like it's trying to act right now as a bit of a ceiling. So let's see, maybe the market's just gathering its strength and is going to pop back up again. It might seriously turn over. So if you're in a practice trade on gold, pay attention to that, and we'll just keep an eye and see what it does. If it crosses back over going down, starts losing again lots and lots of momentum, you can pull out and wait for it to move back in the direction of the 2 largest charts, the weekly and the 2-day. Folks, that's where we are as we end the day on Tuesday and go into Wednesday, the 17th of October. We love to hear from you. Write us cw@chartingwealth.com. We've put a few good trainings in for you here at the end of the program today, as we always do, with a link about our book and how you can purchase it, Charting Your Way to Wealth. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.